So what do you think is going to come out of this? Because this is terrible, and it's terrible for a bunch of people. It's terrible for the industry. It puts us back. Do you let's talk about the regulatory side of things. Do you think this is going to put a bigger spotlight on us? Well, it already is, to be honest. But how do you think things are going to change? Do you think we're going to become more regulated? I know it's not a popular thing to say around these parts, but is that a good thing?
I think we can start by defining what us is. I think, for example, we don't identify with FTX and that whole contingent. So the way I would look at it is that there's obviously going to be more scrutiny and more, at least, attempts at regulation. We'll see what can get through kind of a divided government at this point. But there's going to be more scrutiny. And, a lot of these are still essentially what they are, is unregistered securities. And it kind of hidden in this whole week was the SEC, they won a court case against a token. About it essentially being a security. And now it sets pretty significant precedent for anything that had an ICO. Which was obvious for people to look at the Howey test, but it's now a legal precedent that pushes that forward. And so it is, I think there's going to be more securities regulation on exchanges and on issuers. I think that's number one. Bitcoin, though, obviously doesn't pass the Howey test. It's obviously not a security. Gary Gensler has been very clear on that, and it's pretty straightforward. I think the good news for Bitcoin in the near term, in the long term, is that Ponzi's built around Bitcoin that have nothing to do with Bitcoin, but they can kind of affinity scan Bitcoin and get a lot of the media and people in the public to kind of equate them all together. It's good for those to die, or you just be impaired and not be as big as they are. That's a good thing. But the risk is that regulators going after that stuff can use that as an opportunity to also kind of, where they can, lump Bitcoin into it.
Right.
So this is obviously not great for Bitcoin in the near term, because it's been bad for price, obviously. But I think longer term, it's one of those. This is like a phase that Bitcoin had to go through, because these Ponzi's and these altcoins and these seigniorage have to keep dying for capital to find where it should be.
Does it not just push these altcoin projects out of the jurisdiction of the US?
So partially it can do that, but I think multiple jurisdictions now are obviously going to be more scrutiny of it. These countries jurisdictional shop for a reason. And two, the United States can extend that to, it's got a lot of influence with other countries, and can say, if you host this, that's going to be a problem with us, right? So you can extend your net that way. And then, but also it's not just the regulatory front, it's that it kills kind of the reputation among these things, among traders and among institutions and things like that. So the way I've described it is, we've had this 40-year cycle of just like lower and lower interest rates and higher valuations. And then the crescendo was obviously COVID, lockdowns, print a ton of money with zero interest rates. You kind of hit the crescendo of that bubble. I find it, I keep joking, like famous last words, because I find it hard to believe that there'll be a crypto bubble bigger than the one we just saw, because there's so many macro factors together. And then you can't imagine that the regulatory framework's not going to get worse for these types of things. So it's hard to imagine a bigger bubble, but maybe we'll be laughing about that statement in 4 or 5 years, 3 years. But this might have been the high watermark for just the sheer volume and sheer scale of some of these scams and fake seigniorage and things like that.
By the way, I was surprised that Library token was still going. I think that's one of the first shitcoins I bought about 4 or 5 years ago. As I remember, was that the one where it was like a YouTube?
Yeah, it's like a decentralized
YouTube
kind of thing.
But
on the blockchain, bro.
Yeah. But so what is the impact of them losing that case? Were they fined but are still able to operate? Or are they not? They're not allowed. They're only allowed to sell Library tokens to accredited investors. What's the outcome of that?
So I've not dived deep into that, but they have to rethink all of their situation, because they're basically blocked from doing what they were doing. But again, I didn't go deep into that one because there's just so much this week.
But traditionally with securities, is it a case of if something is a security, you have to be an accredited investor? Is it that kind of thing?
Well, you don't have to be necessarily an accredited investor, but it means you have to, essentially what securities law is, it's not supposed to really pick what investments have merit. It's meant to enforce proper disclosures.
Okay.
So if a company goes public, it's like, okay, what's the board of directors? Who, how much of the security do all the insiders and investors own? You have to disclose risks. and it has to be able to pass kind of a legal merit. And that's a pretty expensive process. So it sets kind of a minimum threshold for you have to be kind of big to go public.
Right.
And so basically by doing unregistered securities, you go around that whole procedure. And so you can have these opaque tokens. You don't fully know the rules. You don't know who owns what. And so that's, I think, what they're going to increasingly be clamping down on. And essentially virtually anything that does an ICO ends up looking a lot like a security. And then if you didn't use the normal security procedures, that's risky. And there's a couple phases there. So some of the ones that got hit early on by using their ICO for American investors. That was like an obvious, that was like the first thing you go against. The second thing you can do is do an ICO, but only for accredited investors or offshore investors. But then you bring the token to an exchange in America or another country that has securities laws, and you can still sell them to retail that way, even though it wasn't the ICO. And that's the part where exchanges are potentially liable.
As sellers of unregistered securities.
For selling unregistered securities.
Yeah.
So there's different layers here where they've clamped down on some more than others. And so that's where we're at.
Okay, so how does this play out? Because will the SEC have to take every single token to court, or does set the precedent kind of put out a warning to all other tokens that they are potentially securities, and to the exchanges to start to self-regulate? How does this tend to work?
So if you set a big precedent, it generally prevents a lot of big entities from doing it in the future. So for example, if you sue someone for selling an ICO to Americans, all these other ICOs are going to think twice and usually not sell to Americans. They're going to sell offshore. They're going to sell to accredited investors. So that's one. So for example, if you were to sue a large exchange or even a small, just basically, if you were to sue an onshore exchange for selling unregistered securities, it would make the other ones quickly reevaluate the tokens they have on their platform. And the thing that's still in the gray zone is that if a certain thing looks like a security and it's probably a security but hasn't been officially called a security,
it's probably a duck.
Yeah. Well, it's basically, exchange XYZ can say, well, we're selling this asset. We don't know if it's a security or not. I think the biggest counterpoint to the SEC from these exchanges can be, you've given us no clarity on how to even move forward. There's no real kind of mechanism to apply really to like be a security or what you should do. So the government's almost kind of left it purposely unclear and opaque and they've used enforcement to go after these things. And I think I don't want to speak for them, but I think their perspective is like, you have to be proactive. I mean, if it looks like a security, you should assume it's a security. Whereas exchanges almost want to do the opposite, where if it's not like labeled officially as security, they want to almost be like, well, we don't know. It's, we want to sell it anyway. And I think what could complicate it going forward is that these exchanges might have to be registered with both the SEC and the commodities trading regulators.
Right. So the CFTC, because of Bitcoin, and then the SEC because of these securities.
Essentially, yeah. Bitcoin, maybe Litecoin, things that don't necessarily directly pass the Howey test. You could have a small number of commodities or digital commodities, and then a very large number of digital currencies, digital securities, and that could be a market that people play in.
And is this all part of like Gensler's roadmap to get us towards an ETF? Does this all play in as part of it?
Well, I mean, I don't want to speculate on his roadmap, but they keep citing exchanges as their reason.
He wants jurisdiction over them.
I think so. And it does seem to be obviously a jurisdictional battle between the SEC and commodities, but it's also, there's been kind of pushback showing that in the United States, a lot of the price discovery happens with those futures anyway, and those are already regulated. So it's kind of like almost like the SEC's argument there has not necessarily the best merit. But it might be used as like a placeholder while they go after whatever else they're going after here. So it's unclear. And it's also, I mean, he's only got a certain amount of time to do whatever he's going to do, right? So we'll kind of know shortly. And now he's potentially going to be investigated by some of these connections. So I have no clue how that's going to turn out.
Is he?
There have been some Congress people that have been critical of Gensler. And they might pursue something. Now, again, it could be complete without merit.
Yeah.
It could go nowhere. I have no idea. But it's certainly, I think it's probably going to be a more polarized or more challenging environment for them to navigate.
Is there anything else on the regulatory side that we may have to worry about as a result of what's happened here? Is there anything else you've looked at?
So I think The separate thing is using that to go after things that are unrelated. So someone can be like, well, that's why we have to ban Bitcoin mining. You know what I mean? Something that had nothing to do with it, right?
Yeah.
Especially because, we're also seeing Bitcoin mining bankruptcies, which is, that's got obviously less legal issues because, they did something, they overextended. Most of them are registered securities. These are publicly traded companies. Some of them are private. They messed up or they were hit by the industry. They go down. And then so they can combine that with the energy FUD potentially and say, well, we have to go after Bitcoin too.
Are you even surprised with these miners, the stupidity of some of the ways they've over leveraged themselves by using their equipment as collateral at their highest prices? Or do you blame the miners or do you blame the people providing the capital?
Well, I think it's obviously a new industry, so it's going to be prone to these problems.
Yeah.
I always would generally put it more on the borrower side. They're the ones that are generally are suffering the most from this, and they're the ones that in some cases are going bankrupt because of this. I think like a lot of us, they probably thought that Bitcoin would go higher before this bull market ended. Maybe it wouldn't go as low as it did now. They wouldn't expect rates to be risen to 4% this year. So the macro headwinds I think are a lot harder on them than anyone expected. And then another challenge is that CapEx comes up with a lag. So, China bans mining, hash rate collapses, machines come to the US, building out data centers, and just tons of capital went into ordering ASICs, building things. And that happens with a lag. And so a lot of the, what's challenging for miners right now is that even as the price has collapsed, hash rate is near all-time highs because a lot of that delayed, decisions made a year or two ago are now coming to fruition. And so that's just, it's really rough for all the existing miners, particularly ones with leverage, because if they don't have leverage, they can shut down their highest cost operations. It's painful, but they can muddle through. They can pause operations. They can, they all have some degree of, you still pay, you're using real estate, you have some sort of fixed expenses, but if you're a very lean, tight operation, you can get through it. Whereas if you use a substantial amount of leverage, that's when you're super vulnerable.
So do you think we need to be a little bit more toxic Bitcoiners?
I think you definitely want to call out things when you see them. And people have different things they're good at calling out, right? And so I think people should focus on calling out what they're pretty sure is a problem.
What do you think is a problem now? What is left?
I mean,
you can call me out if you want.
No, I'm critical of DeFi in general because I think I think I'm critical about the situation where something claims to be a decentralized commodity and is clearly more like a security where you've raised capital and you promise a roadmap and your developers are then trying to do that roadmap to increase the value of the token, right? So there's obviously a lot of obfuscation around that. I think another thing that has to be keep calling out is that DeFi is not as decentralized as it claims to be because it's heavily based on custodial assets, right? So, you can build a pseudo decentralized DEX, you can build a pseudo decentralized liquidity provider, but if you're using centralized stablecoins that have the option to blacklist, freeze addresses, and you're using, wrapped Bitcoin, for example, they can freeze addresses, they can do KYC, they can lose their keys and go insolvent or, secret leverage themselves. It's like this apparatus of seemingly decentralized activity built around in what is in many cases a centralized foundation, which is obfuscation.